Welcome back to my channel, traders. In today's video, we're breaking down the current price action on gold, also known as Xauusd. We'll be walking through the key zones on the chart, the bullish continuation setup that's forming, the major supply levels ahead, and the exact structure that could either keep this push alive or completely break it down. So grab your chart, relax, and let's jump straight into the analysis. First, let's talk about the bigger picture. Gold continues to move inside a clean ascending channel. The market has been respecting both the lower and upper boundaries, creating a series of higher highs and higher lows. This channel is acting as a guide for overall trend direction, and as long as price holds within it, the bias remains bullish. Recently, price pulled back into a key zone of interest, a 4-hour demand area. This is where buyers stepped in aggressively, and we're now seeing momentum shifting upward again. Zooming into the demand zone, we can see that this region was marked by previous imbalance and strong displacement. As price re-entered this zone, we got a clean rejection wick followed by bullish continuation. This tells us two things. First, buyers are still defending this level. And second, liquidity beneath the zone has likely been swept, which often fuels the next expansion leg upward. Asterisk. Beneath the demand zone sits the 4-hour breaker block, which acts as our structural invalidation. If you look closely, this breaker block marked the origin of the last strong move, and it has been respected consistently by the market. As long as price remains above this breaker block, the bullish narrative stays intact. But if price breaks and closes below it, the structure weakens, and we may expect a deeper retracement. So keep this zone in mind, it's the backbone of the entire setup. Now, let's move into the fun part, the upside targets. There are multiple supply zones overhead, and each one represents liquidity pockets that price tends to gravitate toward. The first target area, also labeled TP1, is around 4,245. This is followed closely by TP2 at around 4,265. Both of these zones lie inside a smaller 4-hour supply cluster. If momentum continues, this is the first area where we might see reactions or partial pullbacks. Beyond that, we have the larger supply zone, which aligns with TP3 and TP4. TP3 sits around the 4,320 level, while TP4 stretches into the 4,360 to 4,380 region. This level is particularly important because it aligns with the top of the ascending channel. Historically, price tends to gravitate toward channel extremes before making a larger move. Trendline plus channel confluence. Another important factor here is the descending trendline cutting across the higher timeframe structure. This trendline intersects almost perfectly with the first supply zone, giving us additional confluence for TP1 and TP2. When you see a channel, a demand zone, and a trendline all working together, it tells a very strong story about buyer momentum. And in this case, everything is pointing to a bullish continuation as long as the supporting structure holds. Let's go over the two likely scenarios. Scenario number 1 is bullish continuation. Price holds above the breaker block, continues pushing through the demand zone, taps TP1 and TP2, and possibly extends into the higher supply above. This is the most probable path as long as the structure remains intact. Scenario number 2 is the bearish alternative. If price breaks below the breaker block, closes beneath it, and shifts market structure, we may see a deeper retracement. That could send gold back toward the lower channel boundary or even lower liquidity levels. For now, though, the chart is leaning heavily toward continuation. To wrap everything up, gold continues to trade within a well-defined ascending channel. We've bounced strongly from a 4-hour demand zone, with the breaker block acting as our main invalidation. Upside liquidity sits at 4,245, 4,265, 4,320, and ultimately the major supply around 4,360 to 4,380. This structure is clean, logical, and supported by multiple confluences. As long as price respects the breaker block, buyers remain in control. If you found this analysis helpful, don't forget to like the video, subscribe to the channel, and drop a comment if you want updates throughout the week. Thanks for watching, and I'll see you in the next one.